This is Al Brooks. Thank you for watching the Brooks Trading course. This is the first video in the course, and in this video I will talk about basic terminology. If you are already familiar with the terms that I use, you can go ahead and skip this video. All traders often use words that can be very unclear, and for definitions you can go to my website, brookstradingcourse.com, and there is a glossary there. For example, throughout the video course, I will be using abbreviations on different slides, and these are some of the common ones that you will see. Always in long, always in short, buy low, sell high, scalp, breakout, the close of a bar, double bottom, double top. When you hear me talk about a moving average, I'm talking about a 20-bar exponential moving average, or an EMA. Then the high of the bar. HFT, high frequency trading. When you see me use HH, I'm talking about a higher high. Low is L. A lower low, a low that is below a prior low, is a lower low. When I say moving average, that's the same as the exponential moving average, except rarely I will talk about some simple moving averages. When I do, I'll explain it. Moving average gap bar, when there's a bar where there's a gap between the low or high of the bar and the moving average. Measured move, I talk about this in every video. Major trend reversal, MTR, I talk about that in almost every video. Open of the day, pullback, PB, I refer to that in almost every video. Sell. And then when I talk about corrections, especially after a climax or when I'm expecting a reversal, you'll often see me use the phrase TBTL, 10 bars, 2 legs, which is a common occurrence when the market is trying to correct. Trading range, TR, and when the trading range is particularly tight, I call it a tight trading range, TTR. Every market at all times is either in a trend or in a trading range. A bull trend typically begins with a bull breakout, which is a big bull trend bar, a white bar. Bear bars are black bars, and here the bar opens at this point at the bottom of the white box, and that is the close of the white box. After the breakout, which can last many bars, here it lasted a couple bars, there is a pullback, where a low of a bar goes below the low of the prior bar. And that usually results in a transition from the breakout phase of a trend, which is very strong, into a channel phase of the trend. And a channel is a weaker trend, but it's still a bull trend. We're still going up. We have highs that are above prior highs, so we have higher highs and we have higher lows. And that is the definition of a trend. Eventually, a channel typically evolves into a trading range. So I view a bull channel as a bear flag because most of the time you get a bear breakout and a transition into a trading range. And once the market's in a trading range, it then is in breakout mode, which means traders are anticipating a breakout. And here we have a bull trend and a trading range. The breakout can be to the upside, in which case you're getting a resumption of the prior bull trend. Or it could be to the downside, and you can get a reversal of the bull trend. You'll often hear traders talk about support and resistance. Support is some price below the current price where a sell-off is likely to pause or reverse. So even though you don't see anything right here that is causing the market to go up, the market believes this price is too low. So when it gets down here, the market goes up. Here, we're a little bit lower, but the same general area. There's support down here. Every sell-off is being bought. And resistance is the opposite. It's a price above the current price, and a rally to that level is likely to stall or reverse. On the chart, you don't see a line drawn across a resistance level, but you notice the price action. The market goes up and it turns down. It goes up to that same general price area, turns down. It goes a little bit higher and twice tries to go higher and it turns down. Traders see this price level as resistance, and they expect that if the market gets back up there again, it'll do what it did the prior times. Not always, but most of the time. A breakout is simply a move beyond support or resistance. A bear breakout is a move below support. Here we have a bull channel, higher lows, higher highs, and then we have a break below the line. This is a big bear trend bar, and it is a breakout. It's a move below support. There's other support down here, and the market broke through support here. Here it did not. It kept holding support. Eventually it broke out, and now it's testing the next lower support level, which is a prior low, and we don't know yet if it will continue down and break below that support or bounce at that support. When the market was at this price level earlier, it rallied. Maybe it will do that again now that it's at that same price level. And it did. The support held, and a strong bear breakout led to a bounce instead of a bear trend. Every bear trend bar is a breakout. Every bull trend bar is a breakout. It's a bull breakout. We're reversing up. You can also say that we're breaking out of a very steep 2-bar bear trend. And we're stalling here, a smaller bar with a tail on top, at a price level where the market stalled repeatedly earlier. So we're stalling at resistance. We don't know yet if the market will reverse down from resistance or if it will break out. In this particular case, we broke far above the resistance level, and we had follow-through buying. So this is a successful bull breakout after a failed bear breakout.